All right. Well, welcome to another expert interview. Really excited to have Brian on today. I'm sure we're going to dig in. He's always got great info and great insights. So let's jump straight in. Brian, why don't you introduce yourself? Let everyone know who you are and what you do.
Yeah, Brian Cushing. I'm a mortgage insider to my clients. I do loans, home loans for anybody that needs a home loan. I work at Guild Mortgage. I love what I do, and I like to just be a source, a resource, I guess. And that's I think you've worked with me in the past as a resource, and I'm giving you, I think, some pretty good insights. So I'm excited about having this little talk.
Love it, man. Yeah, I love the newsletter you send out. So plug for that. If you guys want to get on Brian's list, you should. There's great info in there in an industry that's always changing. So on that topic, could you talk about what's trending, what's going on, what's hot in the mortgage world?
Yeah, well, it's an ever-changing, like a who moved my cheese type scenario in the mortgage world, right? So, like, big thing news-wise in the last year, Fannie Mae and Freddie Mac, their regulator was making an attempt to raise money and try to get them out of conservatorship. They've been in ownership from the U.S. government, basically taken over to avoid bankruptcy in 2008, and nothing's changed. So last fall, they added every refinance that closed up until August 1st this year had a 0.5% fee added on top of every loan. So basically about an 1/8 of a percent in rate for just a refinance compared to a purchase, just right off the top. And that's a loan amount that has to be about 548,000 or less is the Fannie Mae loan limit in most of the United States outside of, say, the Bay Area and some spots like that. So, big change this last week, last Friday. So it's July 22nd today. Just in the last 7 days, we got an update that the new regulator, the new director, they booted the current administration, booted the regulator that brought on that 0.5% fee last year, and then the new interim person dropped it. So as of Monday, that 0.5% fee just disappeared off of our rate sheet. So a lot of new renewed interest in refinancing. People seeing their values up. Like, I think the national average was 25% from June of last year to June of this year. So happy day to be a homeowner, right? So that's kind of refueled some interest in refinancing. A lot of people tapping into that equity, taking cash out, knowing that the cost will be a little bit lower is helpful. But I'm waiting for the next shoe to drop, which for investors has been my biggest heartache. Home investors, like if you want to refinance or buy in a rental property, even a second home has gotten more expensive because that same regulator added in March a bunch of restrictions on mortgage companies. You have to limit the number of second home or investment property loans that you sell to Fannie Mae. So that created a whole whirlwind of people that owned multiple properties that were trying to take advantage of record low interest rates. Kind of got the rug pulled out from them a little bit. Nothing's changed yet, but we're hearing that might be the next thing. They pulled back the regulation for the refinances from last year. Hopefully they'll pull back that restriction that's kind of holding up, I think, the market in some ways. For better or worse, I don't know. Should you give all the rich people that own rental properties and investment properties and second homes a break on being able to get ultra low interest rates? I don't know. I think second home markets like Lake Tahoe, 50% increase in values in some cases. So I don't know. I think a lot of people are working from home at their second and third homes and getting 2.99% or less interest rates. It's kind of crazy.
Well, that's awesome. And thank you for the updates. And I think it's important to note that, right? The industry changes so fast, right? I mean, you're talking about something that impacted us for a period of time, is now gone, and changes your rate and ability to do deals starting Monday. So, I mean,
we literally notified on Friday, it made the change on Monday. Like, literally happens that fast.
That's crazy. Well, let's talk about some different segments of buyers. So, I did an expert interview with Zeno, and that was fun. And we were talking about real estate. So let's talk about the mortgage side of it on the first-time home buyer. So yeah, it can be scary to buy a house. I know it can be one of those kind of fear things. You don't want to be rejected, but it's not that terrifying. So what's your advice for a first-time buyer? Like, what are things they should think about, or what's your advice?
Well, so I'm in sales, right? You're in sales. A lot of people sell for a living. So fear of rejection, you got to be the first thing you got to get it over, right? So I would say for a first-time home buyer that's maybe works at the hospital, fear of rejection is like a real thing. Like that's not their thing, right? That's like a problem. So I've had a lot of clients that are just they have to get some thick skin. Like I call it the rhino skin, right? I think Rhinoceros is like 2-inch thick skin. Yeah. You just got to bullhead forward, and sometimes you got to damn the per dam the torpedoes and make offers, and sometimes they don't get accepted, especially when a cash buyer is up against you because they're going to turn this nice little house into a rental property that you would love to raise your family in. You just got to keep after it and stay strong. I've had folks that have been searching for 6 or 8 months. They're going into contracts now, and I think part of it is they learned how to deal with rejection, but then overcome it. So that'd be my first advice to any home buyer, whether you're a first-time buyer or if you haven't done it in a few years. It feels like you're starting over again.
Right. What are some questions someone should ask when they're looking for a mortgage lender? So they're out there, they're interviewing a few, like what are things they should ask or look for?
Biggest thing is really it's going to come down to whatever you want on your mortgage. It's really going to come down to how much down, like how much can you afford to put towards the property, like your cash to close, and what's that payment going to net out to be. I get a lot of people that just want to know what rates today, right? And I can quote anybody an interest rate. I just got to know your credit score and your down payment. But that doesn't really get to the heart of what you're after. I don't remember if you did this with me or not, but a lot of people will put less than 20% down. It's 100% possible to do that. I've got folks that are putting 20% down right now, but they're also waiving their appraisal because they thought that was the only way to get their offer accepted. And then the appraisal comes in low, and now all of a sudden 20% down of a low appraisal means they're putting like 30% down in some cases, 25% down. So one industry insider type thing I like to just let people know is out there is mortgage insurance is required with less than 20% down. So in a case of a low appraisal or even just putting 5% down to start with, you don't have to pay mortgage insurance as a monthly cost. It can be a upfront or one-time cost. So somebody this happened to me this week with a $20,000 low appraisal, instead of putting 20% down, they're really going to put 90% loan to value based on a low appraisal amount. And then they cost them less than 1% in the mortgage insurance cost. They had a great credit score. It was a perfect scenario. And we closed with actually putting less than the original 20% down that they started with. After receiving an appraisal that came in low, that was totally out of their control, my control. It was just the way it worked out. So knowing that there's more than one way to go about it, I think is probably the key. And experience is a big deal. Like I've been in the mortgage industry almost 20 years. So I've ridden the highs and lows of markets in Reno, especially, that have just been, it's been really bad. 2008, horrific. People you just gave a loan to a couple years earlier are now foreclosing or short selling out of their house, and they're turning into renters. And then, fast forward 15 years later, 14 years later, they bought a house a couple years ago, and now they're back in the money with their equity. So I don't know exactly what the original question was, but first-time home buyers or anybody looking for a loan needs to just, I would say, interview like you would interview a real estate agent. You might interview a consultant, interview a loan officer, because one mortgage loan officer, one mortgage consultant at one same company, two different people with two different sets of experience can make a big difference in what options you get. So it's not about the rate.
And I love your advice of the creativity in that kind of example. I think that's something that, not all people in a profession are equal, right? And I think that one thing I'm always looking for is who's the person who's going to get this deal, this transaction, this thing across the finish line, and who's equipped for that, right? Who has the relationships to make it happen, who has the knowledge to make it happen, and who can do that thinking and go, hey, here's 4 solutions, here's the one that fits you. And I've always appreciated that about you, right? Everyone I've sent to you, you'll get creative, you'll create plans, you're really dig in with them. So, I think the advice to someone who's out there interviewing for someone is like, ask that question. How many deals have you done? What's your strategy? What are some scenarios that haven't gone well? And what was your solution? It's fair to ask those things and see if the mortgage lender can give you some examples.
Yeah, 100%. I think ask questions. I love it when people ask me questions because I can give advice, and sometimes it's unfiltered, and for better or worse. But that gets me. It keeps me going every day. I'm in the mortgage industry to afford a great lifestyle and put my kids through college. But in the meantime, I better really enjoy it. Otherwise, I'll get burnt out. And after about 2 years of 10, 12-hour days with the pandemic and this Federal Reserve cuts interest rates, and then Fannie Mae changes their rules and all this stuff. It's really got to be about the people you're helping, and that's what I enjoy. I like seeing people like you get into a house and get to refinance it a couple of years later and put themselves in a better financial spot. or take advantage of some of the equity on like a line of credit to add on to their landscaping in the backyard, or whatever they need to do. I'm here to help people for as long as they need a loan. And unless I get tired of doing it, then maybe I'll retire someday. We'll see.
You may retire, but I don't think you'll ever stop working.
Well, and that's the truth. That's honestly the truth, because it's fun. I do enjoy it. Now, do I enjoy every client and every question that I'm asked? No, but what did I just say about rejection?
Well, I was going to say, yeah, welcome to any industry, right? So let's talk, what other mortgage advice, tips, tricks, conversations, what other things do you think are valid or relevant for people to know before we kind of move into the business side?
Generally about mortgage.
Yeah. Anything else that like people need to hear, you wish they heard more? Or...
Well, okay. So this comes up often here lately. So Zillow says my house is worth X, right? And you know what? It's only worth what you're willing to sell for. So if you ain't willing to sell it, it's only worth whatever you think it's worth, right? So just because you think it's worth, just because you agree with Zillow, try going to realtor.com and see if it says the same number, or I don't know, Trulia, whatever other website that gives you estimated values. No one's ever actually seen your house. So to think that you can just tap into that and somebody's going to lend you 100% of your equity, you got another thing coming. The 2008 financial crash made it so difficult on the pendulum of mortgage loans. They don't want lenders to put people in an over leveraged position on their housing, right? So whether you can do a cash out refinance or a second mortgage to tap into your equity to buy a second home, or pay off your student loans or consolidate debt, which are all great things if it comes with a game plan, just know that you're borrowing, you're leveraging. It's not like you created anything, you just happen to buy at the right time.
Right. So what do those ratios look like? So for someone who might be considering a refi, right? You just mentioned that they're going to save half a point now. So if they're looking to refi, what's that ratio usually? What are the tolerances?
Well, 80% loan to value is where you're capped out, because you have to have mortgage insurance above that. There's no mortgage insurance for a cash out loan. So you could take up to 80%. But if you went to say 75%, you might save another half a point in fees because you're less risky, right? The higher your loan to value, the riskier you are. So if you don't need a 80% cash out just because you wanted to put it in your bank account to feel good about it, but you could get away with 75%, one thing you might be able to do is waive the appraisal, because we're getting that a lot now, where, thank goodness, because appraisers are too busy to get around to doing the appraisal report in less than 30 days. But you could also close out, get some cash out, and then turn around and take that application you just finished and tack on a second mortgage line of credit. Not that you need it, but that you could have it as a future what if the pandemic comes back? What if my job changes? Or what if the bonus structure that I thought I was going to get gets pulled back, or the commissions that I thought I was going to get gets pulled back, and then my lifestyle gets changed a little bit and I have to resituate myself. Being ready for the future, that's the advice I'd give.
That's a great takeaway. And I think there's a couple of nuggets there, where understanding the 80%, but understanding that the closer you get to that, the more you're going to pay, right? And, sitting down with the right person and understanding, here's your cost difference, here's your true situation, and having a game plan. I love that, right? Don't just blindly go do it. Actually sit down with someone who's going to create that plan with you.
Yeah. And before you spend $600 on appraisal, don't expect it to come back at the Zillow value.
Yeah, and don't be unrealistic, for sure.
I mean, because really, like Zillow might be close to what you could sell it for, because Zillow's traditionally been high on their estimates, and people are able to sell their house over asking price in a lot of cases right now. So maybe that's not unrealistic as a sales price, but as a value from a lending perspective, it's going to be more conservative than that. And being okay with that, and not being offended when somebody says your house is worth a little bit less than what you thought it was, because you're not actually selling it.
Well, and I mean, we saw that, right? Like, so the process we just went through, right? The neighbor sold for what, 175,000 more than my house appraised for on the refi, but I wasn't selling. So it's like, that could be the gap, right? Like it could be a six-figure difference.
Or if you had waited till that house closed to do the appraisal on the refinance, maybe it would have come in a little bit higher. Would it have come in 150K higher? Maybe
who knows?
Too late now, right? But hey,
right.
It is what it is, right? You were able to accomplish what you needed to accomplish at the time and get yourself in a good spot. So awesome. I'm glad it worked out.
So let's talk business. So we're kind of catching up on time. I know you got a meeting coming up. So let's talk on the business side. One thing I know you've always done tremendously well is you're a great relationship builder and you're a great networker. How has that, or what advice would you give to a young professional or a business owner on maybe some keys to success you've had over the years?
Well, you got to keep after it, right? So like I mentioned, I'm in the business like 20 years, and I started out, I didn't know us. I'm not from Reno, right? To start with, I didn't grow up here. I don't have like a network of people to tap into and say, hey, I'm in a new industry, give me a shot. So I had to learn my industry first, and then develop the relationships and develop some past clients, develop people that knew me, and then leverage that and stay in touch with them and remember their story. I think that's probably the key, is like whoever you come across, you just never know where they're going to be in 5 years. Because it doesn't have to be a right now thing, right? You're building a network, you're building relationships that could be lifetime. So give it some time and invest in that, right? Like I know a lot about your story because you and I went through it for years. We've talked all about it, all kinds of different jobs and opportunities that have come your way. And I catalog that and I keep notes in a CRM because I can't remember everything. But I'm also like reminding myself, like, hey, don't forget Devin's birthday, or don't forget, hey, he's got something coming up that's like a anniversary, whether it's a personal anniversary or some other kind of work related benchmark, and investing in the relationships and staying in touch with people. So when I go out networking, like meet people new, like I collect business cards, I put them on my newsletter to start with, which will just be something that can keep me top of mind, right? So finding a way to keep yourself top of mind without being annoying. I mean, I have people that unsubscribe from me all the time. I don't think I overdo it, but that it just might not be the right time for them for me to be in front of them, right? And I'm okay with that. I just keep putting the time in and keep making introductions, or whether I'm being introduced or I'm introducing somebody else. Like if I can't help somebody for a commercial loan, I'm going to give them a couple options of where to go and who I think I would trust if I was in a similar situation looking for that.
So much more good advice. This is why I wanted to do this with you, because I love that play the long game and the examples, right? I think so often, especially if you're in sales, you're out there networking, you're chasing that client, you're chasing that transaction, you're chasing that deal, which is great, right? You're hustling. I'm glad you're out there. But the true value is going to come from playing that long game, right? Building your list, nurturing your list, tracking key metrics, and making sure that you don't let it go cold, right? Pick up the phone and say hi, shoot a text, right? Make sure you remember the people you meet with. That's amazing advice and something I've always respected about you.
Appreciate that. Yeah, I mean, that's just, I think some of this is, I think people say it in different ways. Like you get out and you're like, okay, go networking. Like I specifically remember when I was like this first guy I worked for before. So I ended up working at a home builder to really build my network because I wasn't from here. The home builder had a job. It was 2006. Everybody else was doing well other than me because I didn't know anybody. I didn't know where to start. He said like, yeah, go networking. Like, what does that mean? Like, okay, I can shake some hands. And then like, over time you kind of learn. At the time I didn't know what I didn't know. And I think that's true for everybody. So to feel confident, I needed to have some experience. So working at a home builder gave me the confidence because I had a lot of at bats. I had a lot of people that didn't qualify, a lot of people that did qualify, a lot of people that went to a different lender because they didn't like me or bought a different home or whatever. The long game is, I mean, if you're in a career, it's can be a lifetime type of deal. So not looking at the short run for sure, because I mean, the short run pays the bills. And sometimes you get a little thin, and you need to pay the bills for sure. But if it comes through in the way that you approach people or your sales, you're pushier because you're trying to fill your pocketbook today. That's what I mean. Like you're not playing the long game because you're maybe foregoing that longer term relationship for a short term gain.
Love that. So last question I always like to ask everybody is in your case, either a business book or a real estate book. What's a book that you recommend everybody should read?
Sales related or just generally?
Just any book. I mean, our target audience, like we're people watching this are going to be top level professionals or business owners.
Well, maybe not for top level business owners, but I think this could be fun for anybody. So it's called Rhinoceros Success.
Okay.
Okay, so it's I actually read it to my kids because I thought it was going to be funny, and there was some humor in there that it was a little over their head. But I mentioned having thick skin. Well, in a sales context, John Gordon. I have it around here somewhere. I could text it to you and let you know. But it just talks about a rhinoceros versus a cow, right? Two big animals. A rhinoceros cannot actually back up. They can only move forward. So they've just crashed through the trees, crashed through whatever to get to where they got to go. So they're also not a pack animal. So they're not going to hang out and chew the cud with the cows. They're just going to go and they're going to go forward and they're going to run into things, and their thick skin lets them just like it was a gnat move through. So I think just whatever kind of business you're in, I mean, sometimes having thick skin is probably the biggest thing. I mentioned it for first-time home buyers, but I think a sales professional or a CEO, you're going to have shit thrown your way, and get some thick skin.
All right, I'm going to add that to the reading list. That one sounds, that's one I haven't heard of, so that's why I like to
Cool.
ask.
I got a copy for you, all right?
Perfect. Awesome. Well, I always appreciate you making time. For those of you watching the video, below this video will be Brian's contact information, so you can reach out to him. There will be a link so you can put your name, email, and a message in, and Brian will receive that. Also links to all of his profiles, websites, and opportunity to sign up to his newsletter. I'll put a link to that book as well if you guys want to check that out. Brian, thank you for taking the time, man, and always appreciate you.
Absolutely. Take care.